So what happens next? Well, next week, the UAW will formally vote on whether to authorize a strike. And the way things are going, you have to assume they will go through with it. Then the automakers and the UAW will have to have about a month to reach a deal. And then if they can't get there by September 14th, then the workers put down their tools. And a strike can be very expensive. Ford and GM are making 200,000 and 225,000 vehicles per month. Each one represents about 12 grand of earnings for interest, taxes. And I got to tell you something, according to Wells Fargo, a strike, we get this, would therefore cost GM $2.7 billion and Ford $2.4 billion in earnings before interest and taxes. I don't like that. It helps explain where the stocks are. To put that in perspective, Ford's currently guiding for $11 billion to $12 billion operating income this year. So even if we assume a month-long strike only costs them $2 billion, that's still a meaningful chunk of their profits. But, and this is an enormous but, I'm not that worried about a strike by the UAW. It's definitely not a reason to sell the automakers. Why not? First off, this is a one-off cost. Once the strike's over, it immediately is in the rearview mirror. Wall Street only cares about the future, not the past. So unless the strike goes on endlessly because they said the people refuse to collectively bargain, well, it's not the end of the world.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.